Good morning, everyone. Steve here from theturtlefollower.com with your stock market outlook video for next week, which is going to be the start of September. We've gone through what proved to be a pretty major correction in the markets. I think the S&P at one point was down about 12%. And we were kind of looking for a bounce last week. If you remember my commentary from last week, we had just come into that support area around 2030, 2020. Sure enough, looking for some type of bounce, and then ultimately broke right through that here on Friday. Okay, right here on Friday, and then followed through with a huge day on Monday. All right, down. At one point, the Dow was down about 1,000 points. Limit down on the futures, which basically means they stopped them from trading just because of, to kind of control the selling a little bit, so we don't get a market crash. And ultimately, then we had a nice couple days of a rebound. But the real question now is, where do we go from here? All right, this has already happened. It wasn't the best, obviously, but if you followed your plan, you did take probably a couple percent of a loss, but ultimately, you're still here. So the fact is, where do you go from here? Where do we go? What is the plan going forward? So now, still looking at the ES futures, you can see there's a lot of overhead resistance now. Okay, if we take this area that we were in, all right, between 2120 and 2020, all right, all those people now are losers. And to be honest, even the people that bought back in this little range, all right, are losers. All right, because you can see we're pretty much below or right at 1986, so that puts us right in the middle of this range here. But again, a lot of overhead resistance now, and to me, what that means is this could be the start of a turn. All right, and what I mean by that is I'm looking at this now as a fairly important trend line. Right, I don't think we rally back up to here for some time. All right, that's just my opinion, but look at what's happened last time we had this kind of pullback. You can see this big pullback, V-shaped reversal, and all of a sudden we're at new highs. I don't think that happens this time. All right, and the reason I don't think that happens this time is we zoom this chart out a little bit more. Let's go to a 3-year daily. All right, if we zoom this chart out, there was no base here. Okay, this was just a typical pullback. There wasn't a lot of resistance up here in this range. All right, maybe you had a couple weeks of sideways, but nothing major. All right, not like this. This is a substantial top in the market as far as I'm concerned. I don't think we see new highs this year. I think we've already seen them. I think our best bet is sideways, and maybe a little bit more to the upside, but really I have to believe now that this market that we were in for the past 3 years is over. Okay, and that's the way I'm looking at this. I'm looking at it as we need to start being two-sided with our trades. Long trades only don't work anymore. You got to start looking at long and short, if not a little long in cash. Obviously, you don't want your whole entire portfolio in long trades, so maybe you split it up half and half. You do half in long trades, half in cash, just to save it. All right, because we want to limit our downside. All right, because that's the type of environment I think we're in now. I think this is more about capital preservation than making money in the market. So you can see here we've broken down from this, which now this small range, all right, and now from this larger base right in here, a bounce back. I think maybe we get a little bit more upside, maybe 2020, 2032. If not, maybe even 2060, but I think that's a stretch. I would look for 2030, 2020 on the futures as really the resistance point, because the fact is, if you look at this weekly chart here, it's all well and fine that you have this nice big hammer, all right, this pattern right here, all right, that's great, but the fact is now the 200-day is going to start rolling over. All right, and if we can't get above that level, that 200-day moving average, it's just going to roll over. So what I'm looking at now is more of a sideways movement. Okay, and then eventually a lower consolidation, which breaks down to the downside and puts us into a declining market. But that's, that's today. All right, let's see how the market plays out. Again, for next week, I don't really think you're going to see that type of huge moves that we had this week. All right, I think it's going to be consolidated a little bit more normal action. But ultimately, I don't think you see those swings that we saw. All right, let's remove all these drawings because they're all useless at this point again. And here you can see again. All right, where did we come to? All right, we came right to 43.40 on the S&P or on the Nasdaq. Let's put this up there. Okay, this level, this support level here, is now the resistance point. All right, so again, you can maybe get up in that box a little bit, but ultimately, this is what I'm seeing. All right, this downtrend is now controlling, and again, I don't think we see new highs in the market. You can see here we had this nice run, now below the 200-day moving average decisively, and I don't think we get back to new highs this year. YM, right? This one has been broken for a while, right? We talked about this. You had this huge consolidation right through here. Or you could even extend it a little bit more. Look at this big consolidation. All right, this is now what I consider a top in the market. All right, broke down. We didn't even get back there in the Dow this year or this week. So again, we did have some nice nice buying pressure off the bottom. I just see that more as short sellers kind of saying, you know what, I'm out of my positions. I made my money in this little decline. I'm going to reload back when it hits this trend line or something along those lines. But again, I just think the way the market's set up, I would not be surprised to see these lows tested at around 1520 on the Dow, whatever it was on the Nasdaq. All right, 3900 on the S&P, 1820. All right, and then finally the Russell, again, looks like just a rounded over top. All right, here was that big area of support. Okay, right through here, this big consolidation, now turning to the downside. Russell, again, downtrend's already been established. Remove this channel. You can see that downtrend has been established right through there. All right, come back up, maybe till, if you're lucky, maybe to 1200, but I think ultimately it rolls over and we come back down and test that 1050 area. So that's what I'm looking for in the upcoming week. I'm just looking for now some kind of idea of where we are at in this little snapback rally. I think that's all it is. I don't think this is a major bottom. I think if anything, the best thing we get is maybe some sideways action. But again, that's for this week. We'll see how it plays out next week. I could come back next week and we could be at new highs. Not that I think that's going to happen, but again, we just dictate what price is telling us, what the technicals are telling us, and to me, it's telling us this market now is broken, and we are now looking at two-sided trading going forward. So members, that's what we're going to go over tonight. We're going to go over a couple setups, long and short. We're going to go over just short-term, or short trading, because we haven't done it in the portfolio before, and a couple ways you can manage to do that in both your retirement accounts and margin accounts. So if you're not a member, you can head over there, sign up for the free pass, check it out, and we'll talk to you next week with another market outlook video. Take care.